We women many times believe this story that I'm just a spender. I'm a consumer
Mhm.
and I'm not good with money. And while your spouse, your significant other, maybe they were a little bit better at managing the money, it doesn't mean that you can't learn or that there aren't principles of money that can't become exciting to you.
This is the Angel Next Door podcast, where we will talk about all things angel investing: what it is, who does it, how do we find them, what does it mean to invest in an early stage company. If you have ever wondered how you can affect the change you want to see in the world, then tune in to learn more. In this episode, I'm talking with financial tax strategist Leah Williams for a conversation packed with practical advice and powerful personal stories. Leah shares how life's toughest challenges, including starting over financially after divorce and witnessing her sister-in-law navigate single parenthood after tragedy, shaped her mission to help others achieve true financial independence. You'll hear surprising and little-known strategies for tax efficiency, learn ways to set your kids up for success, and discover insights about the upcoming big, beautiful bill that will change the way we think about wealth and planning, because it's never too late to write your next chapter. Enjoy the show. Well, Leah, welcome to the Angel Next Door podcast.
Thank you so much for having me, Marcia. It's such a pleasure to be here with you.
Well, I'm so excited to talk everything tax strategies. One of our top episodes is about tax strategy, and then there's a couple others that we've done too that are in like the top 5. So very exciting topic. I know some people think taxes, snooze, but no, this is a very important and very timely topic as we're coming up toward the new year.
Yes.
So let's start off. Tell us a little bit about your background and how you got into being such an expert in this field.
Absolutely. Well, it's been quite an evolution over the last 10-ish years. That's how long I've been in the financial services industry as a whole. I had big life changes happen over 10 years ago that really catapulted me into a completely different industry. And the short of it is, I found myself completely unprepared financially, going through terrible divorce, awful situation, and finding myself with all these newfound responsibilities and not a lot of financial education to back up the new responsibilities. During that same time frame, I saw my sister-in-law go through similar thing, but for a different reason. My brother passed away unexpectedly, leaving her and 5 little girls.
My goodness. Wow.
Difference between those situations was Matthew planned well. And so
Mm.
the girls, my sister-in-law, Elizabeth, they financially, they've been fine all these years. And it's amazing to see all my nieces go to college and financially they've been okay. And then there was me who was starting with in the negative zone. And I became obsessed with learning money, how it worked, planning, because selfishly, I never wanted to rely on anyone ever again. And now I'm married to a wonderful husband and we have a 3-year-old, and I'm so grateful. But I think women especially need that security to know that no matter what happens, I get divorced, my husband passes away, I never get married and I'm single, or we just outlive our spouses, that women live longer than men. We want to know that we're always going to be financially stable. So that's where the fire came from over 10 years ago, this obsession with I will never rely on anyone. I'm going to learn everything that I can. So I studied insurance, investments, and just have compounded on the licensing and designations and ventured into the tax efficiency realm because I realized, okay, what are all the barriers to building wealth? What are all the hurdles when it's the bad D's, the death, disability, divorce, all of those? But then what are other things that hold us back as we're working really hard to build? And taxes is one of the challenges. You start doing well in life and you feel like you get punished because your tax bill just
Keeps
grows and
getting
grows.
bigger. Yeah.
Yeah.
Right.
So while a lot of people say, oh, well, you're making so much money, you deserve to pay that much in tax. So many people, and at least most people I work with, they're self-made. They have gotten themselves there. And if there are things that are in the tax code that we can leverage, people should know about them. And it shouldn't just be saved for just the 1%ers. So that's where the evolution and the interest and research and really changing my path to really specialize in tax efficiency. How do you build wealth tax efficiently, reduce taxable income, then build tax-free assets? That's where it all came from, is what could stop me from doing this? What could stop other people from building? And taxes is one of the things.
Yeah. Okay. So wait, I do have to stop and ask again about your brother and your sister-in-law. Did he know ahead of time that something was wrong? And so he went and planned it? Or was he just like really good at this from the beginning and he knew to plan in
Oh,
case?
a little bit of both. So my brother was self-made. He worked for a technology company, data storage, and he just he always did the right thing by people. So he had a lot of respect from the CEO of the company. So one of the things that I would say he had that maybe others wouldn't have is when he was diagnosed with cancer, he worked as long as he could, but it got to a point where he couldn't work, and the CEO kept him on payroll
Mm.
for the last few months, even though technically, because one of the things people don't think about is you might lose your benefit
Your
if you
benefit, your
can't
insurance,
work.
everything. Yeah.
Yeah, you might be able to go on disability for a little bit, but it might not carry you the whole time. And so he still needed medical insurance. And so that was one thing that was just that a lot of people might not have that he was given. But as far as insurance, the estate planning, all of those things, he had put most of that in place. And then I believe he was diagnosed in February and then he passed away that December. They had a baby in between there. It's their fifth little girl. So whenever you have
Oh,
a life event through work, as long as you were still there on payroll, all of those things, you can change your benefits, up your insurance. So he had done so much good planning before, but when Cora was born, that gave an opportunity to increase the insurance because, of course, when you have cancer, you can't just go out and get it.
right,
But I
right.
would say the majority of the planning happened, was in place. And then he had really good friends who became advisors to my sister-in-law who helped her with how do you navigate this and how do you use all the resources that are here for you? How do you make that last?
Right. Well,
Um,
I love that we're talking about this today because I'm such an advocate of the fact that we don't need to have an emergency happen in order to get our financial situation in order, right? We
right.
should be thinking about this long before it's a crisis. But too often we hear these stories about people who just waited too long or
Right.
something catastrophic happened suddenly or something like that. And it could be a death, but it could also be a divorce. It could be any type of job loss, an unexpected medical bill. So many things can happen. Will
Mhm.
just throw people into a total loop for
Yeah.
financially. Talking about it now, getting a strategy now is awesome. So tell us a couple things, since we're talking taxes, let's start there, that are common things that people don't really know and would be like, hey, here's a good place to start.
Well, there's two different sectors of people, and it's based on how you're paid. So if you're the W-2 employee, we know that there's a lot of more limitations on what you can write off, and you really have to create either a side gig or 1099 income or something else where there's profit, but it's in the form of a 1099 that you can start racking up deductions for. And a lot of times I'll ask people like, do you have any hobbies? Can any of these hobbies we turn into a real business where you can make profit from it? And so that's part of the conversation. But there are also some things that where we create entities, businesses. And I know I mentioned to you, I work with a tax strategist. I always give people the disclaimer. I love taxes. I know them pretty well, but I'm certainly not the CPA. So I work hand in hand with another tax strategist. And so we'll work on creating an entity that will create a negative K1 that can go towards your W-2 income. And because it's showing a loss, there's something called a leveraged charitable contribution that can go towards W-2 income. So there are things that the regular employee, maybe mid to high income earner that's starting to feel that tax bane can do. They're just not as robust as, say, someone who's self-employed, or then we're getting into strategies through your business, and it just opens up a lot more things that we can do. So
What's a leveraged charitable? What
so
would
we
you
think
say?
of giving to our church, giving to organizations that we love. I give a dollar. If I'm itemizing, I get a dollar deduction. We love that. A leveraged contribution turns your dollar into 4 to 5 in terms of deduction. So it's not credit, right? It's not I give $50,000, I get a $250,000 credit. It's a deduction in income. So I give 50, I might be able to turn that into deducting 250,000 of income, and that can go towards W-2, which is really big for, I mean, this is really impactful for especially W-2 high income earners. Or if you've sold a piece of property or you just have a big taxable event, you got a huge bonus, private equity position, whatever it is, you have a big tax bill. That's one of the things that you
And
can use.
how do you leverage it? How's that work?
There are specific charities that you have to work with. I wish
Oh.
it could be, oh, here's my favorite charity. I want to give them money and we turn it into a 5 times multiple of that. It has to do with real value that you are giving a charity. And there's a couple different ways to do it. Some tax strategists will use land preservation. Charity will buy the land and then they'll say, well, what's the highest and best use of this property? And it's so much more than the actual purchase price. And you get the highest and best use value. So you might give 50, but if it's really worth 200, that's where that higher valuation and deductions coming from. And there's a couple other forms of that, but they all have that common denominator in that the actual value of the gift is bigger than the dollars you spent on it.
Hmm.
That's where the leverage comes
Interesting.
from.
I did not know that.
Works very well for reducing income.
All right. So then you've got the 1099 employee or the person who has their own business. Now we've got a little bit more fluidity on what we can do.
So for this person, of course, depends on where you're at after deductions. If it's a newer business, you might be at that break-even point, or maybe you're showing a loss and maybe that loss can go towards your spouse's W-2. But if you're doing really well, business is profitable, everybody talks about an S election instead of having all of the income flow through LLC and paying state, federal, and the F word, FICA tax. You've got that opportunity to make an S election, pay yourself a salary, and reduce the FICA tax that you pay. So that's very simple. I love paying your children. Of course, I'm an entrepreneur at heart. I had my first in-house restaurant to earn money to buy a pair of jeans that I wanted when I was, I believe, 11 years old. So I have been entrepreneur for a long time. I believe in teaching children that you don't have
Wait,
to
wait, we got to hear that story. You got to tell us about you wanted a pair of jeans. Uh-huh.
mud jeans was the thing when
Oh,
I was younger.
yes, I
I
do
don't think
remember
they sell
mud
them anymore.
jeans. Yeah.
But I'm the youngest of six children, and when you're the youngest, you get all the hand-me-downs. Okay, so there weren't a lot of new clothes circulating. So if I wanted something new or that I thought was awesome or trendy or that I saw a friend of mine get, I had to come up with money to do it. So I told my parents, like, I gotta earn money. I think these jeans are about 60 bucks. And so I got a little bit of help. My dad was the dishwasher. He helped me cook. I sent out invitations to all of our neighbors, gave them the menu, and I had a whole P&L for cost of food. My dad did
I
work for
love
free.
this.
I did not
Amazing.
I did not pay him a salary to help me in the kitchen. I had that advantage going for me. But with tips and profit, I have it written down somewhere. I think I made $70+ I was able to get them.
Amazing.
And teaching kids that you can, I think society teaches them it's too risky. You can't do it. You don't have what it takes. You're going to be made fun of if you go out and ask people. There's just so much that children have that they are born with. And then we and society kind of takes away some of their confidence. So I love paying kids through business, teaching them business, showing them how to create and build. And of course, we love custodial Roths and them funding it early. And I didn't know to do that at the time. I didn't know to start funding a Roth. But to me, that's a great opportunity is to pay your children through your business, set up a bank account for your child, and maybe your child's now paying for their own soccer. Or there's
Yeah,
so much that we as parents spend on children, and or it could just be savings for their future that they get a head start on.
right. As a
Um,
disclaimer, just always follow the child labor laws.
And that's the
Yeah.
thing. If you're an S corp, there's another step that you have to take. You have to have family management company set up that then pays the child because corporations can't pay children. Always check with your accountant, CPA. Certainly don't want people to take this as, oh, all these things apply to me, but some of them might. And so you should ask about them and see what's available to you. I love when appropriate people are on the board. Either there's ownership in company between spouses or you've got board members. And I'm talking about doing it the legitimate way, but say you have a best friend and you brainstorm on business and growth and development and what would the consumer want, and you put them on your board, and maybe you travel to the beach together to have that board meeting, and maybe 3 days you ride off and then you tack on a couple extra days for vacation, but your flight there and back you had to get there, incorporating things that you might already be doing, but when you can tie in a business element, and it has to be legitimate, you have to
Right,
have a paper trail. And that's where some people go wrong is they don't track anything, so if they got audited they have no proof. So all of
right.
those things, when you do them and you stack them together, they become impactful and they start to lower that taxable income. And then when you continue to climb tax brackets, then you add on the more complex things. And there's a lot of cool ways to leverage a big, beautiful bill, bonus depreciation outside of just buying short-term rentals yourself. There's some other things that you can do when you have really high income, over 600,000 in taxable income.
Okay, so tell us about some of the things that will change because of the big beautiful bill.
Well, for the last couple of years, each year we have gone down in the amount that we can accelerate the depreciation on assets that we buy that are related to business. So the most common thing that people have used this accelerated depreciation rule for is real estate. So because a short-term rental is in the eyes of the IRS considered a business. It's a legitimate business that you have to spend 100 plus material hours of participation in every single year, and they give you some tax benefits because it is a business. We were just talking about this before we got on. It's a lot of work to have a rental. And
Right.
with short-term rental, which by definition is the average stay 7 days or less, you can have a cost segregation study done on the house. And we think of a house as just one asset, but really it's a combination of assets that make up the one. You have a cost segregation study done to value the appliances, everything that's in the house. And instead of using a 27 or 29-year schedule to depreciate a little bit per year, you can accelerate that in year one and have a pretty significant amount that you can write off. Now, you can't depreciate land Sometimes when I'm talking to people, I say, okay, ask your realtor. We're looking for low value land, high value property so that we can depreciate more. But that's the most common way that people have used this rule. And last year we were at 40% depreciation. Well, because of the big beautiful bill, it went back up to 100. When you
Oh,
have a cost segregation study done using real estate as the example, you can now, on some of the components of this asset, accelerate by 100%, potentially write off 100% of the value in that first year that you buy it. So that becomes impactful, and that can apply to other assets. You buy a laptop for your business, 100% depreciate it. You're an artist, you buy an easel or just whatever is appropriate for your business. A lot of the tangible assets that you would need, you can now write off quite a bit of them. And I always say, check, there's a section 179, there's multiple components of the tax code, and your accountant will help you figure out which one to leverage because there's some other rules that you have to factor in that will tell you which rule you should use based on the kind of asset that you're trying to depreciate. But ultimately, it opened up this door for people to buy things. Now, don't go buying 100 vehicles if you don't need them, but if you
right.
need a car and you're going to use it primarily for business, it's a great way to get a pretty sizable write-off. Once again, everyone's situation's unique, and I am all for saving. If you don't need the thing, don't just buy it for tax deduction. It's okay to make a profit. We want to show that we're making money and profit, but that's what the rule did. It just opened up a lot of opportunity to accelerate what was once stretched out over many years to bring it all into year one and get that larger write-off.
Interesting. All right. Other things in the big, beautiful bill that will be changing for 2026 and beyond?
Well, there's things like additional standard deductions when you're over age 65. You get additional deductions on top of the standard, which is really helpful for someone in retirement that is trying to pay less in tax, which means they don't have to withdraw as much from retirement accounts, but you've got to stay under certain income thresholds, like 150,000. So there are rules like that. The state and local tax, we were capped at
Mm.
10,000 and now it's 40, but there's a phase
Oh,
out when your income's around 500. So
right.
it's all connected. The more we can push on paper taxable income down, the more we can leverage some of these things because you start to phase out of some of these beneficial new rules that we have that we can leverage. But if you make too much, it doesn't apply. So that's another reason why I encourage people, let's lower taxable income today, but let's also think about the future. If you can create some tax-free assets that when you withdraw them, they're not taxable in retirement, then we can stay under these thresholds and leverage some of these deductions down the road instead of only focusing on today and saving today and forgetting about 20 years from now.
Amazing. So tell us more about Savvy Financial.
Well, savvy is what I like to think of as the more outside of the box way of planning. Half of my time in the industry, I was in management for Fortune 100. So my role was training the newbie advisor who just got their licenses to working with the more tenured advisors and showing them some newer strategies that they could implement in their plans. And what I saw in that wide range was a lot of good that was being done, but a lot that was missing in the traditional financial realm. And we've talked about this before too. The mainstream feeds you some good information and some good principles that you should apply to your financial world, but there's a lot that's not talked about. And going through these financial hardships myself 10, 11 years ago, seeing other people have life things happen that derail them financially. To me, I thought your average person does not have a perfect life, right? We have a
It's
medical
messy.
event,
Yeah.
right? Everyone.
Right.
So everyone has to be as efficient as possible with every single dollar that they have. So when I designed Savvy from the process to the strategies, it was to include what does traditional finance tell you that's good and that we should apply, but what else is available to people that they need to know about? It's not my job to tell someone you shouldn't be spending money there, you shouldn't be going out to dinner there. That's not my job. I will show people how money can be maximized and how they can keep more of it and then how they can grow it faster. But I believe people, once they have education on what is on the other side of their choices, it is now up to them to take ownership of the choice. And my job is to educate and I'll recommend, right? I'll show them if you do these four things, look at how much better the plan can be. But it's their decision. So I want to empower people to understand and then confidently make decisions, but also know their plan doesn't have to look like their neighbors or their sisters. There's no one right way to plan. I want people to look at money differently instead of being afraid of it, having a really bad relationship with it, be excited about it, feel like they're more in
Yeah.
control and they're making the calls and they're dictating what it does and how hard it works for them now that they know more than they did before. So that's really the essence of savvy is let's think outside of the box. Of course, I do lean into how women think a little bit more, just coming from the perspective of being a woman, knowing how intimidating it can be because it's still predominantly male, a lot of men in the industry, and nothing wrong with that. But men and women do think differently. So how we perceive information, I saw a gap in how information was being shared and how it was being understood by women. And that's why a lot of women weren't planning because they didn't understand it. They're made to feel pretty stupid. And I don't want to work with someone that's going to make me feel dumb. So I do lean into how women think and catering the process to something that a woman would enjoy going through.
Yeah. Well, you bring up a good point. I feel like we're at this pivotal time, especially when it comes to financial planners in general, because there is going to be and is already happening this great wealth transfer that everybody's talking about,
Mhm.
where money will be passed down to the next generation. And in a lot of cases, that's going to be to the children. And in a lot of cases, those children are women, regardless of age. Could be
Mhm.
older people, obviously. And I'm hearing more and more that the people who are inheriting this wealth are really not that interested in working with the traditional planner that they had in the past. And some people think, well, I'm intimidated by the financial planning process, so I don't even want to deal with it. Well, that's not necessarily a good answer either, depending on your circumstance. I think obviously we've talked about everybody's circumstance a little different. But I think that now what you have built with Savvy and the direction that you're going and helping people think about their money in general and how wealth in general is going to work. And when we say wealth, we mean all kinds of wealth, time
Mhm.
wealth, health wealth, relationship wealth, all of those things. So you are putting together like a complete package for people as opposed to just saying, hey, we're going to invest in this stock or this mutual fund or whatever. And I feel like that the place we're at right now is that pivotal moment where we really do need more savvy financial out there so that people will be able to feel good and know that their money's working for them in the right way.
Well, I understand that I am different in the planning space, and there's a lot of different methodologies around planning and money. And I would say most of them are more in that traditional box. And sometimes that's what people are looking for because it's comfortable, it's known. And I always enter conversations with people excited to share with them what else is available, but also knowing that two really big boxes have to be checked in order for them to work with someone. And that's they feel that the person has the skill, the knowledge, the strategies that they believe will help them. And they just have to generally enjoy working with them. I have to like you as a person.
Right.
And if you can't check both those boxes, then it means it's not a good fit. So for something as personal as money and your future, I think that if people are open-minded and willing to seek out and find someone that check both of those boxes, that they can make huge strides in their planning, but it means that people are willing to be a little vulnerable. I've even compared it to feeling like you're getting naked in front of somebody because you're showing them all the things,
Right.
the pretty things, the things that you're proud of that you've done, and then the mistakes that you've made. And we have to know them in order to help them, but it can feel scary. So that's where finding someone that you feel like has the skill, but that you feel comfortable with because it's like a therapist. I'm going to tell you all my things that nobody else knows. I'm going to feel really comfortable with you.
That's right.
Yeah, there's a lot of good people in the industry. Of course, I like my lane. I like the approach that I take, but that's why there's so many people. You've got to find your person and who you're
That's right.
comfortable with.
I totally agree. All right, Leah, before we let you go, we need to hear another crazy story because you have some good stories about what people are doing with their money or
Yeah.
that you were trying to get jeans by having your own restaurant at 11.
It was a hustler, whether it was watering plants for people, watching their dog. I think this desire and belief that many people have either lost or especially for women that has been taken away. We women many times believe this story that I'm just a spender. I'm a consumer
Mhm.
and I'm not good with money. And while your spouse, your significant other, maybe they are a little bit better at managing the money, it doesn't mean that you can't learn or that there aren't principles of money that can't become exciting to you. What I would share with people, especially women, is that it doesn't matter where you're at. I even on podcasts that I have, the headliner of one of the episodes was I was sleeping on my sister's couch after I got a divorce. There was nothing. Technically, you could say I was homeless. So, wherever you start from, if you have the belief in yourself, if you are willing to change, if you're willing to open up your mindset, and it requires some work on you. I've had to change my relationship with money. I was repelling it, how I treated it and believed money, its role. I had to flip that story as fast as I could. So women have to be willing to do that and realize that what's on the other side of being open-minded, changing your mindset on money is massive opportunity. What you share with individuals on angel investing, I mean, there is so much that you can do. So I would encourage people, think about Leah, homeless, right? Sleeping on my sister's couch, and realize that it doesn't matter what has happened. There is always a new beginning. There's always something that can be done. And it might not change next week, but it will change. And the other piece is you've got to surround yourself with the right people. I've told people many times, you will find yourself having to do life surgery where you just have to cut people off that are not breathing
Yep.
life into you and encouraging you. That will hold you back. That is one of the biggest things that you can get caught up in, is just not the right people in your circle that are holding you back. So there's a lot of things that I have overcome, but what that tells me is that, one, we've all been through hard things. I'm not unique in that, but it does mean that it can give hope to others if they've gone through something hard. That's not the end of the story. It's just a piece, it's just a chapter, and there's so much more good to come.
That's right. It's all okay in the end. And if it's not okay, it's not the end.
Exactly. And you have a choice. It helps us take ownership of our lives instead of falling into the victim phase. And I've done it plenty of times. Poor me. Can't believe this happened. Can't believe that person did that to me. But we do get to make choices, and there is a lot of opportunity to take advantage of. Yeah. More people need to listen to you. More people need to just change the narrative of their life, and they'll see the impact of it.
Yeah. I like what you said about you were actually repelling money, because I do believe that if we put the right mindset together, you will actually start to attract the things that you need in your life, the people, the money, the
Mhm.
wealth, the time wealth, the health wealth, the relationship wealth, all the things. So, Leah, thank you so much for being on the podcast with us today and sharing all these amazing strategies with us.
Oh, it's my pleasure. Thank you for the invitation. It is such a joy to spend time with you. I appreciate it.
Thanks for listening. To connect with me, visit my website at marciadawood.com. And please subscribe, follow, and leave a review. It helps the podcast get seen by more people. And remember, you can also find the Angel Next Door podcast on YouTube too. And if you're looking to learn more about investing in the changes you want to see in the world, sign up for Ann and Bill Payne's ACA Angel University classes. Go to the angelcapitalassociation.org, all one word, to find out the schedule. And classes are now available on demand. Many classes are offered, everything from angel investing basics, which include fundamentals, risk, due diligence, term sheets, valuations, returns and portfolio strategy, and even a class on group formation. There's even a deeper dive where you can get advanced classes, including capitalization tables, startup boards, and exit strategies. If you're not already a member of the Angel Capital Association, you can become one for a low price that will give you unparalleled access to discounts, free webinars with a huge archive of content, networking opportunities, and much more. We'd love to have you join us. All content for this website is informational and not intended to serve as legal, tax, accounting, or investing advice. Well, Marcia, that's me, does serve on the SEC Small Business Capital Formation Advisory Committee. My views are my own and not the views of the SEC or my fellow colleagues on the committee. Our speakers and hosts are thoughtfully selected for their educational value, but their opinions are their own and do not necessarily represent the views of the host, me, or the Angel Capital Association, and neither specifically endorse the use of presenters' products or services. Listeners of the podcast should consult their own tax, investing, legal, or accounting advisors before making important financial decisions. All warranties, including accuracy, completeness, and suitability for specific purpose, are disclaimed.